Safe investments are boring and they generate low returns. If you want big rewards, you have to take big risks. How many times have you heard things like these? Fortunately, they're a complete lie. The best investors in the world do not take huge risks for large returns. Instead, they strategize to protect their hard-earned money. When Richard Branson founded Virgin Airways, he wanted to know how he can protect the downside. In this case, the cost of the planes could bankrupt him, so he made a deal with Boeing. If his business failed, he could return the planes. The best investors in the world all share one common strategy: risk as little as possible to make as much as possible. Now obviously the average Joe is not going to start a new airline, but this concept still applies. There are many safe investments that can provide pretty decent returns. Which one you pick will depend on your goals. For example, when you need the money. If you need easy access to your money, you have two main options: high yield savings account, HYSA, and money market account, MMA. They're like your typical bank account but offer way better interest payments. A money market account lets you access your money with direct checking and ATM withdrawals, but usually has lower interest rates. In contrast, a high yield savings account do not have these privileges but offer better rates. Both accounts currently pay slightly above 4%. These rates change constantly, so you must search online for the best updated rates. Typically, you will find the best rates at online banks and credit unions. These are FDIC insured up to $250,000. In the case that the bank goes belly up, the US government will pay you back the money you had in the accounts. If you don't need your money soon, you have other options that might pay you more. The concept for these are pretty much the same. You lend someone your money and they promise to pay you back in the future with a little bit more on top. However, there are two major risks when you lend someone your money: interest rate risk and default risk. When you lend someone money, you get an IOU, usually called a bond. If you get a bond that pays you 6% per year and a month later, the organization starts selling new bonds that pay 10% per year, who's going to want to buy your low paying bond if you want to cash out? No one. That's interest rate risk. What if they run out of money and go bankrupt? They can't pay you back, and this is the default risk. Although the US government is one of the safest places to put your money, it too can default and become unable to pay back its debts. You can lend money to the US government through products such as treasury bills, treasury notes, treasury bonds, treasury inflation protected securities, TIPS, and I-bonds. Treasury bills, notes, and bonds are basically the same thing. The main difference is the duration of the loan, with other minor little differences. Bills are 1 year or less. Notes are 2 to 10 years, bonds are 10 years or more. Additionally, if you want special products that account for inflation, you can purchase TIPS or I-bonds. These will try to protect you from the effects of rising prices. If you're enjoying the video so far and finding it helpful, make sure to hit that like button and the subscribe button. Alternatively, you can lend your money to a bank. If you lend your money to a bank, you will get a certificate of deposit, which is FDIC insured. You can also buy into a money market fund, MMF, which is a group of CDs and other investments. Unlike CDs, a money market fund gives you easier access to your money. If you want to take bigger risks to get a bigger return, you can lend your money to corporations or buy corporate bonds. Depending on the company, these bonds can be very safe, which typically have lower returns, or very risky for higher returns. To mitigate your risk and get exposure to different bond types, you can buy into a bond fund for a small fee. A bond fund is like a basket with different fruits in it. If you want more interesting safe investments, there are some nice ones that can give you an income for life. The best part is you don't have to work for it. This next video will break down what an annuity is and its benefits.